replay. Always appreciate the live listeners, always appreciate the listeners in the replay. As we always do an episode during the 8 o'clock hour on Tuesdays, every Tuesday. This is episode 158, Opportunity Cost Loss. So just really excited about this episode today and what we're going to be bringing. Once again, thank you all for tuning in live or listening to replay. Very excited. Today's episode, once again, is Opportunity Cost Loss. And we're going to be talking about what we call OCL, but opportunity cost loss are things that are very, very real in business. And we can stay on this subject for entrepreneurs all day. So many entrepreneurs are they can become so much more efficient, and so the vault helps become efficient because it deals with consulting and just making sure that people are efficient in their business and things of that nature. So really excited about the episode today. I'm going to start out as we always do with news. If you all want to know, there was $124 million moved in the cryptocurrency market by one company called Stellar and another called Ripple. So you all can see that. Uh, Very interesting to see, but nonetheless, that's what's going on. $120 million was moved in cryptocurrency, particularly with uh, Stellar and Ripple. So you all can look into that. Just always good news. A lot of people say they don't have a lot of good content on different areas, and so we just wanted to talk about that one. Um, there's quite a few things going on. We really didn't see a lot going on in the public. Haven't really been tuned into the news. Of course, Vista has been very active. Vista, is a venture capital firm run by Robert Smith and his crew. They're gobbling up companies right now. If you look into Vista Equity Partners, you all can see that the company is buying up companies by the hundreds of millions of dollars, doing a lot of investment in the software area. So you all can see that. So let's go. So just going to hop straight into the episode. Opportunity cost loss. This is a subject matter that we get a lot of trustees that come through, and they always say, how do we count the cost? So many people even come to the vault, they count the cost, whether that's trustee training, whether they count the cost for their private education. um, there's an opportunity cost loss. So we did our best to get a definition, did our best to get the definition from what is that, Investopedia. So in our realm, in our sector, the definition over at the vault, opportunity cost loss is potential earnings that potentially were lost just because of the fact of the cost of doing business and not being able to save or retain money, be able to reinvest capital. The capital was lost. It wasn't used as an equitable growth position. It was used as an expenditure deduction, something that's a business expense, operating cost. Operating costs are potential for sure operating cost loss because unless they're able to be deducted as a true expense for the company and it counts against the equity of the company, or at least the the capital that's cash flow, then there's an opportunity that future earnings that the capital could present to future earnings are not able to acquire more funds. So it's definitely important to look at opportunity cost loss, even when you look at it for the long term. When you all look at it across the board, one of the best businesses to look at for opportunity cost loss are insurance companies, where they're letting based off of a health situation, amateur situation, amateurized situation, or a what do they call them? Actuaries. They have actuaries as well. People that actually do calculations, hard numbers on people's live statistics, things of that nature to help give valuations. Those things are very, very important, whether that's on businesses, whether that's on people. Those things are very, very critical. And over a period of time, if they're not addressed, there's a big leak in the company. So, what we've seen at the Vault is, and that's just do research, most costs are going to come in the form of taxes to the company. And so we've seen people even with charities that say, hey, can you get rid of sales tax with a charity? So that's something you want to check with your accountant about. But in most cases, most people aren't able to get rid of that expense, and that's traditionally on the public side with employees. That could be upwards of 40% plus. Even if it was 30%, you can see how much has been taken away for opportunity to reinvest, to grow. So when you see Amazon doing corporate buybacks, they're taking back stock and share to reinvest that back into the company. Whereas, most shareholders are looking for their dividends. Most shareholders are looking for, equity to grow in the asset itself. Whereas the majority shareholder and partners are buying back the stock. So they're not missing opportunity cost loss. Why? Because they're not in a position where they're taxable to receive taxation, because they're taking tax deductions based off of research and development, corporate buybacks. These are research and development fees. Well, we need to take that and get rid of, public equity. We don't really need outstanding shares. We need growth. We need equity retained in the company. And so you all can see the position that's being held. Opportunity cost loss comes when people don't have a big picture in mind. A big picture is the end goal, a big goal. It may not be the end goal, it may just be a big goal. But the big goal tells you how much you're supposed to make. And, just from partaking in the trading as a trustee, it really develops your mindset, because as a trustee and trading, we see what true hedge fund managers are going through. They're carrying everything as a business. They're the majority shareholder, and it's interesting to see that, contrary to belief, most people don't know, most hedge funds have majority shareholder is the hedge fund manager. Most people do not talk about that. Opportunity cost loss is where you're the leader. The buck starts and stops with you. And we see that people don't measure what they're supposed to make to where they're at. And for every day that you're not there and that you don't achieve the daily goal, you're not going to get closer to the bigger goal. And the opportunity cost loss is the faster you get to the bigger goal, the faster you can get to the next. So, we see people that say, oh, we want to make certain amounts from the trading. Well, it's like, okay, well, what would be a dividend that would give you that every month? How much do you need in an asset, and what would be the percentage for it to yield you that every month? So you didn't even have to do that. That it'll just come in automatic. And so there's opportunity cost loss and so many different things that we do or don't do. For every inaction, we definitely have lost. And when it comes to business, and particularly when it comes to investing, there are losses. And it's interesting because here's opportunity cost loss and how it looks, how contrary to public belief. Opportunity cost looks like, okay, we shot 100 times. We lost 75%, but the 25% we won big. That's opportunity cost loss. Whereas some people would say, and contrary to that example, why shoot 100 times? Why not just shoot 10 times and hit 10 times correct? And then every moment, every day counts. Every moment counts. The opportunity cost loss comes from the fact that we're minimizing our opportunity to win. After 10, we're done. We're not supposed to be done after 10. We're supposed to keep going. By not taking more shots, we didn't make more. We only made 10 shots. We may have made all 10, but the person that shot 100 made 25. So there's an opportunity cost loss by not doing it faster, by not taking more shots, by not putting more time in, by not investing more capital. And disclaimer, there are bad ideas that can be funded. You don't want a bad idea funded, but there are bad ideas that get funded. Thanks, Lewis, for tuning in live. Appreciate you. Uh, Opportunity cost loss. Whoo! Here's a great one. This is an easy one. Freedom. How much does it cost for you? How much does financial independence cost for you? Is it $2,000? Is it $6,000? Is it $8,000? Is it $10,000? Is it $20,000? What is it going to take for financial independence and freedom? And for every day you don't have it, it costs. Toll on your body. By not being in the right position, own nothing, control everything, you're in a position of liability. You could lose it all. Opportunity cost loss. Why? Because if it was protected, it's not going to get taken from your control. You might not own it, but you control it. Opportunity cost loss. Why? Somebody just got you. They sued you. They got all the assets frozen now. Opportunity cost loss. Any of the assets that you were holding, what happens? Now they're subject to creditors' liens. They're in your name. Opportunity cost loss. When it's in a different position, business over personal, you're in a position now where, okay, I don't have anything. And you see all of the elite structured this way or properly in the right position. So it's very imperative to say, okay, we didn't lose the asset. First thing was losing the asset. After you lose the asset, that means you lose the earning potential from the asset if you lose the asset. So it may not always be about potential earnings, opportunity cost loss. It can just be about the asset. The asset is an opportunity cost loss. Now, well, here we go. We got these guys. You see them walking around in the public. They'll tell you, oh no, there's no need to buy gold or silver or those precious metals. For some odd reason, you got senior investors telling you that they have positions in this. So anybody that doesn't have a position is going against senior position. Senior position is holding precious metals. Every senior manager of capital, you hold a position that never goes to zero. So some people say, okay, why would I have gold? It's not making me no money. It's just a piece of gold. It's only valued at what people say is valued at. Okay. So it really doesn't mean anything. I can't pay my bills with it right now. It's not cash. Okay. Opportunity cost loss. As soon as you get rid of it, you lose whatever value someone said it was on the stock market. As soon as you lose the asset, there's no potential opportunity to make money off the asset. It's sold now. So why would I not hold an asset that actually has some type of sellable value? That has some type of sellable value. Is a potential opportunity cost loss. It's not just the opportunity cost loss, it's a potential opportunity cost loss. I see we got some people in the chat, and I'll just say this because this is the way the mentors came at me. They said, write down the biggest check you can see yourself receiving from that particular business. Okay, the trading, whatever you're doing out there, the biggest check. If you can see yourself making hundreds of million, you gotta write it. If you can see yourself making 80, you gotta write it. If you can see yourself making $100,000 and you have to get detailed, some people get analytical. Is it a year, a month? Whatever, you gotta write it there. That says this is the biggest number I need to make myself feel good. And so we got that number now. For every moment that we're not there, we're missing out on opportunities. The more capital we have, we knew all the things we were going to do. Those opportunities are going to come to you when you have the capital. We got to at least know how much capital we need, and we got to get there quickly. And so the sense of urgency of entrepreneurship lends to a lack of opportunity cost loss earned. Most people are going to, when we say most, we're talking the 80. This show is made for the 20. But the 80, they're going to miss out on the opportunity. I talked to this is a business associate, longtime friend, and he said, "Hey, I want you to look at this deal, sham or real." Well, no actuality, he should have hit me and said, "Hey, I think this is a sham. What do you think, sham or deal?" But he still asked the question nonetheless, and I said to him, "We look at all deals. We look at the good deals and the bad deals. While you're playing with your son, you guys can look over a deal for 30 minutes. Say, hey, son, we got to look at a business real quick. We got to know if we're going to invest in this business or not. If this is even worth our time. We'll read paragraphs together. This is how you teach your 2-year-old son how to read, by reading a paragraph with him. So you read the paragraph of what this business is offering, sham or real. Wow, we just want to know if the business is a good business or not. Who else can tell us but us? You're a senior trustee. We look at it's almost going back to what's the biggest check you can see in it. How much money do you want to see from the business? So once you know how much money you want to see from the business, then you can gauge and you can see once again how much you're missing out on if you don't move fast. Most people don't have a cost that they're losing because they're not in the earnings mindset. But you got to know what you want from the business. And that's a cost. It pays the cost to be the boss. Yes, time can be your biggest asset or your biggest loss. Time lost. What if you're investing your activities in high yielding, capital returning activities? And that's where the vault's been for years, ladies and gentlemen. And just like Amazon's doing corporate buybacks, we've been doing corporate buybacks the whole time. We've been investing deeper and deeper into private education. You invest deeper and deeper into the private sector of the relationships and the people that are in the private, that go to the private, that are in the private. Everything's labeled as private. And whether you all know it or not, listeners all across the world, guess what? These functions, some of them are less than $1,000, some of them $1,400, some are $2,600. So you can get a price range of 2019 of how much these events are going to cost you to take your family to the next level by investing in private environments, private networking events, private wealth forums, private I mean, they got a lot of different private organizations, but they're private in the respect of they're just a networking event. When you hear of groups like Toastmaster or Rotary Club, those are just organizations that when you're a part of them, there are specific things that you go through, and you know they're positive professional networking environments. And I don't know if this story has any relevance. I was dealing with a younger person earlier today, and really just said to them, and they asked, should I be networking in an environment where there are people that are 45 and up? And as a millennial trustee, I share for sure. You definitely want to invest your time in an environment where people have a lot more capital, they have a lot more responsibility, they obviously have lived longer. Some of these people have a lot more assets. So why not deal in an environment where there is bigger fish in the bigger pond, not just being in a big pond and being in a little pond and being a big fish. When you're looking to invest your time in environments that are educational, that are senior, senior environments are the American Bankers Association. I haven't shared that one in a long time, but the ABA is a great organization to look into and really see what's going on. A lot of people say, oh, these securities and all of this good stuff. There's securities educational courses through the ABA. And, we always encourage people just to really do their homework. Of course, a lot of people come to the vault and they feel like, okay, they're going to try to do the opportunity cost loss prevention mode. This means you're trying to prevent yourself from losing money. Okay, so you ready for that mindset? It's called playing not to lose. Here we go. You want me to say it again? It's called playing not to lose. And if you need me to repeat it one more time, it's called playing not to lose. Okay, that doesn't work in business. This isn't a job. This is completely growth mindset from week to week, month to month, day to day. You almost are swimming naked. You don't know where money's coming from unless you're in a passive income business. At any moment, a storm can come take out the business if it's brick and mortar, do some type of storm, natural catastrophe, bam, the business is done. If it's literally brick and mortar. So then you get people that are, oh, we just gonna keep it online. Okay, well, now you see the internet. There's investment on the internet side as well. Um, period. Investment, and that's capital that's being taken away from really growing a company. Instead, it's just an expense. It's the growth mindset, ladies and gentlemen, in business. And me and Cornell, when we do the workshops, when we do the talks, even on here, having him on is always a good thing because you know being around him really stretches the mindset. And me and this guy have an interesting relationship because even on our birthdays this year, we we were in an educational environment, investing in our private education. It was nothing less. Was it, oh, you were away from your family? We were investing in our private education for the private family. It's no way around it. Now, the interesting part about it, as much as I make it sound as it's a business thing and, private family investment in free education, in all actuality, he was relaxed. He wore what he wanted to wear. I wore what I wanted to wear. We had to show up to an educational environment because that's the time they were putting on an educational event. But it was a really relaxed environment. It wasn't oh, you had to wear a suit and tie, or you had to dress a certain way. It was a very relaxed, educational, mastermind type environment. So you get to hear positive mindset. You get to hear the charge them up. A lot of people need to charge them up nowadays. So you get to charge them up you know. But at the end of the day, it's great for networking because now you're in an environment where people talking about networking. Oh, I don't have these people in my area. Well, sometimes a lot of these events are less than $1,000, $500. You can go to this event and be around big hitters, big players. And some people say, well, I don't know what I bring to the table. Expertise in individual areas are important. There are wealthy people that have diversified portfolios. Their portfolio may have a majority in one company, but they still have younger succeeding generations. Succeeding generations always want to create new investments, new streams of income for the family. So in turn, you get different type of investments from wealthy families investing in people. We sat in front of a younger person once again early today, and just letting them know, hey, people, there are Fortune 500 companies that have foundations and charities, and because you have a charity, they'll give you money to do the things that they really are not able to do because they just a charity. They got a foundation. Okay, wow, they're gonna give away some money. They have to give away money because it's part of the rules for the foundations. So they're giving money away to other charities. If you have a charity, you can receive grants from these organizations. And so when we talked to this young individual earlier, it was just like, hey, look, if you're doing business through charity, just know that there are Fortune 500 companies dumping money in those sectors all the time. You got to be able to look for those things, especially if you're in charity. And in traditional business, you're not going to see those type of things. The big companies are just going to gobble you up. It's called a buyout. They don't do handouts. They do buyouts. On the public side and the business side, they do the buyouts. On the charity side, they do the handouts. They give you cash, a grant to the foundation or charity to do some type of charitable work that they are, otherwise won't be able to get to because they got so much money they're not really going to spend it anyways. So making money giving it away. How awesome is that to be a part of that? Opportunity cost loss. America is missing the late great charitable workers from a charitable philanthropist way. In all actuality, philanthropy is an investment, but at the end of the day, philanthropy still doesn't have enough philanthropy in it. Everybody has now a cause attached to their commercial business. Oh, we're going to give away a pair of shoes to somebody because we're making shoes for you. Or we're going to, give a plate of food away every time someone buys food from here. Everybody's business now has, and traditional, most common a trend is most business now has this charitable component tied to it. Okay, that's not a trend. That's old. It's definitely not a trend. And it's an investment. So the guys that aren't telling you that they're making money off it, it's not an investment. Google's a $90 billion company, 75 billion plus. They have the charity that gives away the money to other charities to do programming and stems and different things. And you all can reach out to them. It's a very encouraged position, but you have to be positioned correctly. So that's where you come to the vault. Or there's opportunity cost loss. Opportunity cost loss is not moving on investments fast enough. It's not just maybe about getting the money, it's about being able to have the money to do the investment. And so really at this point we really just see a strategic position of moving very, very swiftly, very, very fast, being very, very nimble in your businesses. Those things are important when you're thinking about entrepreneurship in 2019 and beyond. A lot of people want to have an internet business. That means you want to be nimble. That means you want to be in control. Particularly because it's web based, it's completely smartphone based, it's completely computer based. That means that if you don't have the internet, there is no business. Cool. People like it that way. They like to cut it on and off. That's the new entrepreneur in America. They want to cut off entrepreneurship. That's why it's easy to sell part-time entrepreneurship. But the ones that are winning, we're full-time. We're full-time. There's no part-time entrepreneurship. Period. And when it comes to philanthropy, it's the same thing. It's a business. We sat in front of somebody today that said they feel bad asking people for money, but they want to be straightforward. That's what you're supposed to be, straightforward. But what's the market missing? Straightforwardness. People are sold by bling bling, bling blow, bling pow. Like the market is interesting out there. It's the wild, wild, wild. It's the wild, wild out there right now in business, ladies and gentlemen. And being protected is an opportunity cost loss if you're not protected. Period. So, for all the trustees that are listening, please feel free to reach out. We have some things planned for you all. We know some of you all have, you're doing your thing, and if you're listening to the podcast, feel free to reach out. The things that we worked on privately, as far as an event, that's where we are now. So we're gonna move forward with that. Traditionally, events are always for trustees, always have been, and so it's always exciting to just work with people that are trustees. That's the elite training. That's what you miss out, the opportunity to be around people that are invested just like you are. What happened to your friends that are invested in the business with you, or your family that's invested into the business with you, but they'll tell you, oh, you got a great idea. You think I need great idea pats on the back? We need capital. We need strategic partners. We need a plan. We need a lot. It's a business. We can do it together. Team mindset. Big business mindset. Oh no, I'll wait for you to do it and then I'll do it. Wow. How many of you all have heard that? I'll wait. You hear that? They're already waiting. So they're not investing. They already lost the opportunity. Because the opportunity is right now. Opportunity's always been right now. We appreciate you all for tuning in live or listening to replay. It's always an awesome opportunity to talk about opportunity cost loss. Uh, you can calculate that in your business based off of what you want out of it. That's the simplest way for us at the Vault. Of course, you can all can check out the Investopedia definition, but at the end of the day, the days are ticking, ladies and gentlemen. The sands of time, we can't flip this little sand hourglass over. We might get 24 hours every day, but we can't flip the hourglass over in our life. There is no flip it over. It's just the time's going through and we can never get it back. When people say, "Oh, I don't know how to find the time to get it done every day." Man, you gotta be kidding me. If you drive to work, you got the time. If you drive to work, if you catch the bus to work, you got time. And if you don't go to work, you got the time. We were thinking about doing an episode called "I Don't Have the Time." But in all actuality, if that's a monetary value, that means you don't have a lot of it. It's time to build that value back. The way you build the value back is by investing in your private education, your education overall, investing in your family's private education, going to the law library. We'll at least say that much. Opportunity cost loss. So many people come to the Vault and say, this is what the mentor used to say. "Well, Trust Christian, it seems like you're very enamored with the information." I'm like, man, I was like, I'm not. But he's used to people being enamored with the information. Their mind is blown. I didn't look at it as a mind blowing experience. I said, okay, this is the way to operate. Very calm, collected, in the moment of what needs to be taken care of. This is business. I was talking to Cornell earlier. He talked about the trading. I'm gonna talk to all the people that's doing the trading, or, even business. I respect that man, because he said the truth, and only the few are gonna listen. He said there is no emotions in business. Now that's a tough pill to swallow. Don't think I'm being anything other, but the emotional style creatures, that's not gonna rub them the right way. What do you mean there's no emotions in business? I care about my customers. I have to care about the customer. I have to care about the people that work for me. I have to care. I have to care. Okay. Let's look at business though. Do they fire people that have worked there for a long time and they care? And all these other things? Yeah. Okay, so it's business. People get fired. Business. It's not personal. So he says, "Oh man, you're gonna get emotional." I'm like, why am I gonna get emotional about knowing that if I turn this light switch on, that means the light's gonna come on? Right. So this man has literally showed institutional trading to trustees or people that went through the webinar. I'm talking about institutional. So there's a group that they have out there, that is a part of the network, and it's cool. But they were talking about trading, and I said, "Cornell, man, I wish I really could just put in there the definition of institutional trading versus retail trading. They actually have a thing called market sentiment." Now, Cornell actually told me what market sentiment was, so I paid attention and I saw what market sentiment was on the private side. But on the public side, it's people's emotions. So I said, okay, Cornell, that's definitely not going to be, me. Why? Because the institutional style trading is purely based off of logic, confirmations, and non-emotion. Because it's business. When I was going to post the definition in the group, The institutional definition said you're trading other people's money. So this is where I didn't want to give that definition to people, because not all institutions are trading other people's money, but big institutions are trading people's money. But they try to throw in their hedge funds and how hedge fund managers are trading other people's money. And I was like, that's not the market today. The market has a lot more hedge fund managers that are managing their own capital, and they really are charging fees to other people to manage their capital. But for the most part, most hedge funds nowadays have somebody that's a billionaire already managing their own money, and then they're managing other people's money. Or someone that has hundreds of millions and they're managing their money and they're managing other people's money. So you see what they call these family offices, syndications, multifamily office syndications. These are multiple business families that are working together, doing deals private equity wise together, financing people privately. So it's just interesting to see the opportunity that people just they don't see. Okay, institution now. We're talking about the banks. There's no emotion in the bank. You either got the money in your account or you don't. That's what it is. The bank is accounting. Opportunity cost loss comes from not being able to execute. So many people come to the vault and they say, "Oh, like we say, the mentor said they were enamored with the information." That means their mind's blown. They're not even on the getting it done right now. They're just blown away how, hey, man, I can't believe this is something that, I never knew about. Well, clearly, you have a public education. There's a private education and a public education. When we distinguish the two, we can see one is business and one is personal. Everything in the public says own everything, and the private it says own nothing, control everything. There's a difference. And mindsets, and education, and philosophy, and execution and thought process. The investment is where you get the payoff. If you invest nothing, you get nothing. That's the way the world works. That's the way business is working right now. Even if people are getting OPM, they still have to put some time together to put together a proposal to even get OPM. Opportunity cost loss comes from not being educated properly. If you didn't have a finance education or some type of education to get capital, then where is the lack in capital? Most people are lacking in capital. So the money that you don't have is the money that you're not making money off. So very ferocious in the mentality of a capital acquisition right now. Definitely pushing every single day, being around people that push you, that say, hey, you deserve that new car, you deserve that new house, you deserve that new diamond, you deserve that new piece of art, you deserve that trip, you deserve all of that and more. And the way that those things are done is through asset acquisition. So with the asset protection, asset acquisition, Cornell really came in handy, because a lot of people have an issue with asset acquisition, and it's such a marital relationship, because you think about it, if the guys are in the hedge funds trading stocks or trading in general, they're doing the same thing trustees are doing. They're in the same position. They're trustees of a hedge fund. They don't own people's money. They're just a senior manager, senior trustee, asset manager of the assets. Like we say, a lot of times you see a lot of the senior hedge fund managers right now that are uh, they're more upfront capital themselves. They're not out leveraged as they used to be, where it was 60-40 back in the day. I was, yeah, 60-40, the hedge fund manager 40. Now you see a lot more 60-40 with the hedge fund manager at 60. You all can do your market research for the hedge funds. There are quite a few funds out there. Even if you saw a 50-50 swing of managers, they're still, the shakedown came upon when people were out there managing other people's capital, didn't really do a great job, so people lost their shirts. People are always going to lose their shirts in investing, especially even in the private sector. But you see bounce backs. bigger on the private sector. Private sector still holding strong in a lot of sectors. We even talked about private sector move with the 124 million through the crypto with the Stellar and Ripple for the news. That's a major play when people are telling you to yield and shield yourself from the market. When you see companies that are making major capital movements, it's definitely worth the noteworthy look to check out what is their company about. Why does it have so much capital in their hands? On the books, because clearly they presented some type of value to truly have some type of valuation publicly of $124 million moved publicly. That's a big deal. That for one day, that's a big deal. A lot of people didn't even realize that it was one day. That's a 1 day capital transfer. So when you see $124 million, and we've seen that recently with even half a billion recently transferred, that's huge. So uh, we're definitely excited to do the episodes and really talk with you all every Tuesday. Probably do a pop up episode this week. We're just really excited to talk to you all about opportunity cost loss because this is something that, you know, if you only knew, every time you ask yourself, should I hold off on this investment? You lost money. Every time. When should I do it? When should I pull the trigger? When should I? When should I? When should I? And as soon as you didn't, bam, somebody else. And even if it's not someone else, it's still the moment of not being able to gain capital off of that capital. It's not invested. It's such an awesome mindset to have. So appreciate you all for tuning in live or listening to replay. Opportunity cost loss is just something that should really always be taken into account as a trustee. Making sure you're up on your accounting game, your GAAP game, generally accepted accounting principles. GAAP is a big deal. Generally accepted accounting principles is called GAAP, GAAP. And just being up on that, even any type of accounting standards, those things are critical when you're dealing with looking to measure capital, how much you lost. A lot of people don't like accounting because you got the formulas, and then even on the finance side, you still got exponential formulas over there, so you all can see how capital can grow, even on the finance side. Finance and accounting are two different things. You getting money is not the structure, not the tax form. Getting the money is not that. Those are two different things. So it's always good to be able to have a conversation with you all every Tuesday. Really be able to put out some good content and talk to you all. Definitely don't see any questions in the chat, but the biggest thing is being able to mitigate that loss. And the way that you mitigate loss with the vault is not being liable. You got to be able to not be in that position and liable for anything, whether it's avoidance or not. You're not liable, and that's really a critical position to be in nowadays, because a lot of people say it's a litigious society. Everybody wants to sue you. Hey, who knows? But there's an elite structure, and then there's the common structure. The common structure is the one that they tell you about on the websites. The elite is private. It's not on the internet. So appreciate you all for tuning in live or listening to replay. Feel free to go back and listen to the episodes. Christian at Trust Christian.